Okay, today second session, 19 April 2026, and the part number 6. So in part number 6, we're gonna discuss the tax period. Although we've seen the example in the part number 5 also, now we're gonna understand the uh, UE tax rate. The UE tax rate on each entity, juridical person, qualifying free zone, natural person, are the multinational entities. So this is the our topic that we're gonna learn over here. But before that, you guys, I think we continue almost 2 hours. Let's take the 15-minute break, and we're gonna resume from there.
Recording has been resumed.
So UE corporate tax rate. So what are the taxation rate in the UE and how it will be applied to the juridical person, natural person, or the multinational entity? So first, the taxable person, we have there is a different tax set of taxable person in mainland entity, non-qualifying free zone, foreign permanent establishment, PE in UE. So what does that mean? The branch foreign company, non-qualifying free zone means the company is inside free zone. Company is inside free zone, but is not qualifying to 0%. So this is the taxable person, and there might be they are opted for the 9%. So this is non-qualifying free zone person and the mainland. And then we have the qualifying free zone. What does that mean, qualifying free zone? A specialized area in the UE. Now, free zone, we are familiar from the beginning when most of the people are came in the UE. We are heard the free zone, maybe in own country also we heard the free zone. But still the people who haven't interact or the work with the free zone, maybe for them the clarity will not be there. So just as the understanding, I'll give you the brief overview. Free zone, more than 50 free zone in the UAE. One of the common free zone, Jabal Ali free zone, Ali free zone, Jafza free zone. Okay, Jafza free zone. Okay. So I'm just giving you a couple of names. So they are the names. So there's another, we can say the in Dubai, DSO free zone. So these free zone, now here's another point. The designated free zone is another concept. Designated free zone is another concept. And then non-designated is this concept we are familiar when the VATs came. When the VATs came, they split designated and non-designated in 2018. So now the designated and non-designated, let's understand that free zone who have their boundary walls. Who have the boundary walls. If you see the DSO, I did not make any boundary walls. Boundary wall means they have the certain area, but there is no security measures. Or I can say the gated community. Gated community. Gated community, anybody come inside the free zone, there is a security gate, you have to pass through. Okay, security measures are there. But there is certain free zone, if like the DSO, if you see I did not make any circle over there. So there is no, when you go in that area, nobody will stop you. You can go easily. But if you go in Jafza and Dafza, Dubai Airport free zone, at the security gate, they will stop you. They will ask why you're going inside. Do you have the gate pass? And here, nobody will ask the gate pass. So hope the basic concept you understand the free zone, then the designated free zone. Now, when the corporate tax came, so the another term came qualifying free zone. Now, the qualifying free zone person. One is a qualifying, another is a person. This is the another two words are added, another definition is extended. Definition of the free zone is extended. Earlier, we are familiar with the VAT came designated and non-designated. Let me again, when VAT came, so the same free zone categorized into designated free zone and non-designated free zone. So they extend the free zone definition, designated and non-designated. But now when the city came, so they extend the definition. They said, okay, free zone and qualifying free zone is free zone person and qualifying free zone person. Now, when we talk about the person, what come in our mind? When we talk about the person, what's come in our mind? Anybody would like to explain over here? When the word coming, the person, so what's coming in our mind? I appreciate your quick response. I appreciate your quick response that when we talk about the person. Abdullah mentioned the natural person, juridical person. Anybody else? Anybody else? Guys, if you answer on that and take the participation, our understanding will be enhanced. So when we talk about the person, so the first thing, the person may be the juridical or maybe the natural person. But first thing, the person subject to tax, or we can say taxable person. Abdullah mentioned rightly. So it's coming juridical person or natural person, and here the concept is coming taxable person. Okay, so maybe the person is a free zone person only, and maybe he's the qualifying free zone person only. Now the definition of that, the qualifying free zone person will be go to 0 rated, and this will go to the 9%. On top of free zones, they said now maybe the person is located over here or maybe located over here. Doesn't matter. There's a certain terms and condition. If meet the term and condition, so this also can be 0 rated and this can be also be 0 rated. Whoever meets the condition of the city, whoever meet the corporate tax requirement, he subject to 0%. Now the qualifying 0% is 0 rated, non-qualifying is we are saying the free zone person is 9%. Now currently in the market and all the social media, if you see in most of the free zone, they are doing the marketing. Even just now you go and search on the Google and Rakesh free zone, or Jabal Ali free zone, or DMCC free zone. They will mention, okay, come open with us business. We are tax free. Giving the word tax free for understanding purpose, but they are using 0 rated. 0 rated tax. But I use the word tax free for understanding. They are doing the marketing. Come with us, tax free. You are not gonna pay the tax. But they are saying 0 rated. Come and open business with us and subject to 0 rated corporate tax. Now this they are misleading the businesses. They are misleading the businesses, but this is the marketing tool they are using. What I'm trying to highlight, all the companies, whether here or whether here, while opening the license or opening the company inside the free zone is not zero rated. Is not subject to zero rated. They subject to zero rated if they meet the terms and conditions of the corporate tax. Only when they meet. Yes, this free zone subject to zero rated. The companies who are operating in the free zone, they might be subject to zero rated if they meet the corporate tax 7 conditions. Only you will become. But all the companies not meeting the condition of that corporate tax terms and condition. So that's what I'm saying. They are misleading all the businesses. When you open the license, and they will, as a sales team, you will be registered as a company. When you come and say, okay, you said is a zero rated, they said, okay, go and check with the tax consultant. At the beginning, they will not tell you. When you ask the cross question, you guys was publishing and still publishing or marketing a zero rated, but now we are not meeting as a zero rated. How come? They will say, okay, we have in-house separate team for the tax. So what they mean? They onboarded many consultants with them, or they have own team. It's okay, engage with them. They will do the assessment, and they will let you know whether you are zero rated or 9%. Same thing. Many companies they open the businesses in the free zone without knowing the reality. Okay, so now I believe we understand the concept of the free zone. Multinational entities. This is the another term is used in the return, even the first return in September 25, the due date, the last days. One of the client approached and he said, okay, we file the return. We file the return, but there is no tax payment. We submit the return and there is no tax payment, but we are mainland company and 1, 2, 3. And so when we come, then we look into that. So one of the option they opted for this under the further terms and conditions. So the company, they're saying, okay, our head office in India. So now they are making this India head office as a taxable person. While doing the wrong selection, they make the India head office as a taxable person. The head office here is the LLC company. Okay. Of course, the group structure may be different. The head office was in India, but this is an LLC company. You are standalone juridical person. You are subject to the tax in the UAE. So they said, no, our head office in India. So by mistake and by misconception, they choose like that. And of course, the treatment will be different. So now, unintentionally, they registered the Indian company subject to tax, and they will pay tax in India and as well as over here. Point is that to file a return is not a challenge. File a compliant return, compliance with the applicable regulation, this is the challenge. Mostly people still submitting the return, but they don't know about these terms, For them, return, okay, take this, okay, it's moved to next step, fine. Okay, then take this, is moving, not moving, okay, then don't take this, take another one, is moving, good. So at the end, return is submitted. and the people not familiar, the laws, regulations, the terms, for them is a game. How to reach the finish line. They reach to the finish line and submit return, and okay, this is the return submitted, this is the tax amount, khalas, and pay. So this practice is not continue in the longer run. Even all the companies, they subject to penalties. We receive the many queries. When we come to know, they said, okay, we submitted the return by in-house, we submitted it through the XYZ, but we don't know. So the common question, we don't know this is the correct or wrong. So here lies saying corporate tax is a self-assessment. Self-assessment as per city law. So if you do the correct assessment or wrong assessment, this is your call. But they will not consider you aware or not aware. You file the wrong return, you are leading to the penalties. Penalties in two terms. One is the admin penalty, another is the under or overpayment of the city due to that. So administrative penalty, what is the administrative penalty? I'll just give you the example. In terms of the VAT, many in the market now FTA officers are visiting and they are requesting tax invoice. In the retail market, they will go. When they give the tax invoice, they not charge the VAT, or their template is not correct, or their calculation is not correct, whatever. Or the field that as per Article 59 of the VAT is required to show is not appearing. FTA put the penalty starting from 2,500 up to 10,000, because 2,500 per document, per invoice, that is non-compliant. So anyhow, this is another direction. We'll come back. Now we understand the multinational entities. The multinational entities, they are operating worldwide. Okay, this is another concept. The mostly the companies, the turnover is these are subject to Pillar 2. Okay, maybe most of the people are heard about the Pillar 2. So we'll discuss later on the Pillar 2. So this is the mean of M&E, multinational entity, in the corporate tax return. The one of the election is shown. Are you part of M&E? So mostly, what is that? 3,125,000 euro. Okay, if your turnover is exceeding this, then you are falling under Pillar 2. So anyhow, this is the one of separate discussion, and we will discuss later on. So let's come on that today point. Taxable person. So let's understand taxable income or profit subject to. Okay, now here the both words are mentioned. Here the both words are mentioned. Profit. So anybody would like to clarify what is there any difference between the taxable income and the profit? The first 375,000 subject to zero rated. Above 375 is 9%. So the another point, if let's say our profit is, if taxable income is a 1 million. So now the first 375,000 375,000 subject to zero rated. So what is the balancing figure over here? How much the balancing figure over here? 625,000 at 9%. So how much the tax we gonna pay? How much the tax we gonna pay? Yes, yes, 625,000. So how much the tax will be? We will pay. So 625,000 we multiply by 9%. How much the tax? 56,000 something. Guys, you must have the calculators and the copy and pencil, because while participating in such calculation, you will learn on that. 56,250. This tax we will pay. If we will pay, so what is our effective rate? So what is written? Effective rate of tax is not 9%. So how we, but we knows 9% is the corporate tax, 9%. But now effective rate of tax is not 9%. How we will calculate the effective rate? So ultimate on 1 million we are paying only 56,000. So what we gonna do that? So 56 divided by 1 million into 100. So what is the rate is coming? What is the rate is coming? So effective rate, how much we are paying? 5.625. 5.625. This is the effective rate is coming. So that we are paying over here. So this calculation, what we did for to calculate the effective rate of tax. Okay, 9% is there, but still the first 375 subject to zero rated. That's why this effective rate is not the 9%. Effective rate, how much we are paying. The same example, so we will understand over there also. Let's say the taxable income is 1 million. On the 1 million, first 375 subject to zero rated. Then the balance means 1 million minus this, balance 625,000 multiplied by 9% is coming 56,000. So now we are calculating the effective tax rate, means this is the amount of tax and this is the amount of income. 56,250 divided by 1 million is coming 5.6%. So this is how we calculate the effective rate of tax. This is also important in certain calculation or certain test during the corporate tax. We required to calculate this because we have to apply on the tax calculation. So that's why this is the point I highlighted and did the exercise. We cannot say to our clients, our customers, so due to corporate tax rate, we are increasing our prices. So we are saying inflation due to taxation rising our prices. That means you will increase your price not by 9%. You will increase your price due to inflation, that is this. This is the important when if you did the miscalculation and you add the impact of 9% in the prices, okay, so you will be out of competition. out of competition. What this mean? Because in market, the inflation is at the rate of 5.6% versus you increase the 9%, the customer will not come to you. He will say your prices are higher. So that's the thing, you are out of competition. The other, you are not competitive in the market. So this calculation is also important. What is the effective rate of tax? What is the impact of the taxation you want to increase in the prices? So maybe 6%, 7%, 8%. See what is the effective rate of tax that you are adding into the prices to cover the inflation or the increase in cost. Okay. The tax is the expense or the cost to the business. But of course, he will say he will bypass to the next businesses or next consumer. So far, any question or any point, anybody want to highlight something? Small business relief will be available to the business with revenue of less than 3 million. We added the point over here, but we're going to discuss in the coming slide the small business relief as well. So these are the points we frequently added on the different slides, small notes, but this is the important, and repetition is to understand and frequently highlight what are these points. If revenue is less than 3 million, so we can claim the small business relief. And the small business relief is available for the tax period starting from 1st June until 31st December 26. For the tax period, the companies or the person tax period ending this means if the period ending on Jan 27, so he is not eligible. But if the period is ending on November 26, is eligible. So this is not customized date. If your period is ending up to this or before, yes, you are eligible to claim. And there is further other condition also. We will learn into that. And if anybody want to learn or read from their side, so here's the corporate tax guide. This is the reference. You can open that and learn from there. And here I added the link. If you want to see the, I'm going to share the link also in the group. Okay, let's start our topic again. Now the next is the qualifying free zone. But before that, anybody have questions so far? Anybody have questions so far? Let's take quickly the question. Anybody have question, please? Okay, let's continue the topic. So our topic, the next part is qualifying free zone. Qualifying free zone. So here in the qualifying free zone, we have the qualifying income. In qualifying free zone, we have qualifying income. Okay, the qualifying income at zero rated. Qualifying income is zero rated. So zero rated means halal income, like deductible income, like not subject to tax. So for our understanding, we are saying in halal and haram, this is the one of the deductible or non-deductible, okay, taxable or not taxable. So we'll discuss in detail in the next session or the module C what are the qualifying free zone income and how it will become subject to zero rated. Non-qualifying income. See, here we are covering the overall framework of the tax. Of course, from the next session, more likely we are able to start one by one the topic, and on each session we will have the assessment also, the online MCQs also. The non-qualifying income, again, the non-qualifying income, if the pass the de minimis, the must test, that is the 5% of the total income. This is general, I'm saying 5% of the total income. If the non-qualifying income is less than that, so if it's passing the criteria, so this also will become your halal income. Okay, of course there is a formula for calculation, but as a general, I'm saying if a small income, the business is doing, let's say the 97% is the qualifying activity and 3% income came from the non-qualifying activity, and they are meeting the de minimis test, so still that income subject to zero rated. Okay, but the de minimis test, how it will be? Yes, non-qualifying income, sorry, qualifying income NQ, this is the NQ, this is the N non-qualifying NQI. Okay, qualifying plus non-qualifying is equal to zero rated if the de minimis test is passed. So here the abbreviation we already written here, qualifying income, non-qualifying income. If the free zone person, qualifying free zone person, now again, if we become qualifying free zone person, below benefits are not available. What that mean? Then we don't have 375,000 threshold, zero rated. In standard rated, this threshold we are saying is available. This amount taxable income up to 375,000 will be zero rated, and here will be not available. All the income is subject to 9%. If any income is not meeting the qualifying income, other income subject to 9%, or all the income subject to 9%. So here, qualifying free zone person, below benefit is not available. Zero rated band is not available. They cannot be part of tax group. They cannot take the small business relief. They cannot take the benefit of qualifying group relief. So they cannot take the benefit of business restructuring relief. Business restructuring relief. This is the another important and the common transaction in the market, but mostly people are not familiar what is how it will be in the tax. I would like to highlight and explain this. Let's say sole establishment. Okay, sole establishment is a natural person, right? Is not LLC. If sole establishment, the person Mr. A, he have one company, the sole establishment. So he decided, so let's convert this sole establishment into LLC, right? So when they are converting, are they changing the business form? Ultimate, he will be take 100% share by Mr. A. This is one of the classic examples, sole establishment converted to LLC. So whatever the financial books he already operating, okay, of course they will have the books of accounts. Okay, so when they change this books, the type of the sole establishment into LLC, so this is called PRR. So this transaction or this business subject to business restructuring relief. This is the relief given to such transaction where such restructuring are happening. So they have this relief, they can obtain this relief and they might take the advantage to pay the less tax or not pay the tax on the gains. But mostly people are not familiar how to treat the transaction the conventional way. They start the company from this date. Although the business is not started from this is not the new business. Because your trade license issue date is shown 2020. Trade license still showing the date of issue is 2020. In future, later on, FTA will catch from this point what you did on this. This is another important point. We have to understand and apply the correct tax treatment and accounting treatment and reflect the books complied way. Anyhow, once we come on this topic, we will understand in detail. So here the qualifying free zone person, the below benefits are not available. 379 not available, tax group not available, SPR not available, qualifying is not available, business restructuring is not available. Okay, so now the another part here we are discussing the qualifying income, and if the test is passed, all the income is zero rated. If test is failed, all the income is 9%. This is the de minimis test. Here's another complications in certain scenario, if is doing the qualifying income, and even this the non-qualifying income, there is a certain terms and condition under that this option is still available. What that means, if you are doing the qualifying income, it will remain subject to zero rated, even the de minimis test is failed. Even the de minimis test is failed, but there is certain associated condition. Other than qualifying income, that income will be only 9%. This means all income is not subject to 9%. Let's say, so the qualifying free zone, he will have some income to 9%, some to 0%, but not all the cases. Okay, not all the cases, but there is a certain scenario or certain combination of activities. This might fall. Qualifying income, you are paying the zero rated, and the non-qualifying, only the amount of taxable income from non-qualifying activity you are paying 9%. So M&E top-up tax pillar 2. So the tax rate will be 15%. So now earlier we know corporate tax is a 9%, but now the corporate tax rate is 15% also. But not on all businesses, on the multinational enterprises as a top-up tax. Definition of M&E under the city law: consolidated revenues more than 750 million euro and 83.1 billion dirham, 3.15 billion dirham. So now the one as a general, as a principle, as a common, if we understand the where we seen the M&E, so we will test, okay, either our company operation or the revenue or taxable income is coming 750 million euro. If no, then we'll say no. So this application of the city is not applicable. So this filter, quickly we will mark the no, and this will be irrelevant, the further applicable, because here the return will be changed. If we say yes, then the return will go on different pattern. Here's another example where we're saying, okay, even qualifying free zone is eligible for zero rated, but qualifying free zone elected to normal city rate. What is the normal? 9% standard rated. If qualifying free zone person elected to normal or standard rated, here the word standard rated will be more appropriate, that is 9%. Then 375 375,000 threshold will be available. They can be part of tax group. They can claim the small business relief, and they can take the qualifying group relief and the business restructuring also, when they opt for the standard rated, that is the 9%. Any questions so far? Yes, please. Any questions so far from your side? Any questions? Okay, let's continue the next slide, and let's see the next slide. Okay, the business restructuring. Okay, business structure you operate. Okay, we understand the difference of business vehicle in the market. So let's dive into that and understand which kind of business vehicle. Business vehicle means that which kind of the companies, how we can form the company, how we can do the business. Business structure you operate through or fundamentally change the city position. Business structure that the currently you are operating that fundamentally change the city position corporate tax application. What does that mean? Let's say the juridical person, the natural person, maybe is exempt, maybe is zero rated, exempt automatic by application. So let's understand this part also. The same business activity can have very different city implication, depends. Same business activity, if our way of doing the business or way of using the business vehicle is a different, how they can conduct through different channels or different type of business. They might do the business activity through sole proprietorship, partnership, or company. So the sole proprietorship, mostly this is the common confusion. The sole proprietorship, sole establishment, and sole proprietorship, both are same. Both are same. Anybody would like to comment on that? Sole proprietorship and sole establishment, can we treat as the same? So LLC company, if single owner, one person as the owner, single owner, one person owner, they can also use the sole proprietorship. And sole establishment is not written the LLC. And sole proprietorship, sometimes we seen a sole establishment, sometimes we seen the sole proprietorship. But the important is that we have to see the LLC word is there or no. Because if LLC is not there, then it will be natural person. If LLC is there, then is a juridical person. What is the impact? If the sole proprietorship or sole establishment as a natural person, this is the impact. if you take the salary from the business under the sole establishment or sole proprietorship as a natural person, this is not deductible. Self salary withdrawal are strictly non-deductible. But if the same company is a LLC, the salary withdrawn or taken by owner is a deductible. Like here is no and here is yes. This is one of the basic difference. But of course, the implication, we already in the previous session learned that natural person, what are the relief is available, which are the income are exempt, 1 million rule for the natural person. So now the another business vehicle, unincorporated partnership. Today we also took the example for the unincorporated partnership, how it will be operating. The example where I mention two person like Zanfar and Abdullah, they put 1 million and they buy the property for 2 million. This is the example of the unincorporated partnership. Because to real estate, we don't require to take the trade lessons. Physical transparent by default. Each partner is taxed individually. What does this mean? Whatever the income is coming, it will be taxed at this level. At this level. Why? Because there is no trade lessons in between. So they will say, okay, how you come together? We did the agreement. We come together and we made one agreement. We said, okay, these are the terms and conditions. So we'll contribute 1 million, buy the property, and then we split the profit 50-50 if we give on the rent. This is by agreement. So now the income coming from here, if coming in my hand, taxable. Coming to in Abdullah hand is taxable. This agreement is not creating any juridical person. Is not creating any partnership because it's not registered anywhere. So here the meaning of that, this partnership or this, we made the investment through this agreement, is a transparent. Whatever the income coming in the hand of the owner or in the hand of partner is subject to tax if that income is meeting the criteria. Physically transparent by default, each partner is taxed individually on their distributive shares. Partner can apply to the FTA to tax the partnership as a single. Okay. Now, if we both decided, this is the unincorporated by unincorporated partnership because we established by agreement, but still we have the option. We will submit an application to FTA and we'll ask them to register for city. We can submit. This is in the favor of the FTA. As a standalone, we are not paying the tax, but when we register with the FTA, we are subject to the tax. Given this favor, but actually this is not in our favor. This is the tax authority in favor of tax authority. Because currently we are not paying tax, but if we go this way, so we are paying the 9%. Juridical person, LLC, commonly we know with the name of company, is a separate juridical entity. That opposite of this, what we are discussing, this is the natural person and his business. Both are same. Natural person, owner, and business both are same in the eyes of law. In the eyes of law. Okay. But here the owner and the company both are not same. Both are not same. This is separate person. This is separate juridical person by law. He have own rights and liabilities. He have own rights and liabilities. Standalone, they are two person. Here is a one person. Company pay its own city. You as the shareholder are not taxed on dividend received because the company will give you the dividend after tax. And then if the company is paying the dividend after tax, okay, so then it's not taxable. And another criteria is mentioned, that is the personal investment, because this is not the business. But on the other side, we seen if we made the investment in the UAE resident company, they are paying the dividend after tax. Family foundation. Today we discuss the family foundation, the wealthy people, how they treat their wealth. Before going to the next, so if you have any questions, so please let me know. We're still covering the same topic, but any question, please? Just now, Sohail, you have issue with your system, or I'm not sure, because all the participants are working fine. So you can, okay, now it's appearing. Yes, please, just now, Sohail, let me know what is your question, please. Please unmute your mic.
Can you hear me?
Yes, please. Yes, please.
Sir, in case of the sole proprietorship, if the owner has taken salary, so we have to add back.
Yes, add back.
Okay. Is there any limit that the owner can take a salary? Or the whole salary should be add back?
Whole salary, because just now we are discussing that the business and the owner both are same. So
it should be reflected in the financial statements, or when we are filing the corporate tax, we should mention there only.
Sorry, come again, please.
This add back should be reflected in the financial statements, or when we are filing the corporate tax, it can be shown in that tables given in the
see, in terms of now, the auditor is also requesting, okay, calculate your tax liability before issuing the reports. And normally they are referring to the tax consultant, take the calculation from them. But on the other side, if we ask the corporate tax liability point of view, even is not done in audited financial statement, while computing or while submitting the return, there you have to disclose that, or you have to add back. I answer your question. But if you do at the financial stage, financial statement level, that is preferred. If not, then of course you can you have to do at the return filing stage. Any other question, please? Let me see any other question, please. Okay, you can raise your hand. So if you have any question, hope we can answer on that also. So let's cover, see the next slide. And before going to the next slide, okay, anyhow, let's cover the next slide. And meanwhile, after that, we have to go on the FTA portal and do some exercise. Because this, what we are doing now, it will not be understandable until unless we do by hand this exercise. Okay, the same thing, type of businesses are business vehicle, which will pay tax. We discussed in the previous slide, but here again, we are trying in a different way to explain the concept where might be have the better understanding. Unincorporated partnership, not a juridical person, not having a separate legal personality. So this is the important part. The company just now, the last participant is also was asking the same. Natural person and his business is the same person. Like you, one person have two pockets. You take the money from one pocket and put another pocket. This is the natural person and his business situation. Because there is no limitation, no rules and regulation applicable. Nobody will stop you. Why you withdraw the money from your right pocket and you kept on the left pocket? Because same pocket belongs to the same person. Both pocket belongs to the same person. So same way, juridical unincorporated partnership or unincorporated businesses, no juridical person, because nobody is coming and stopping you. They don't have any separate legal personality. So separate legal personality, just now I will try to explain again. Natural person, let's say he have pocket 1 and pocket 2. So he took the salary from here that we call the business. What he did, he put in his pocket, that is called the personal. But law is saying both are same. At the end, the person is same. So that's why the salary cannot be withdrawn. Versus juridical person. I'll take the example LLC for better understanding. I'm using the. So now when the scenario is coming here, so business like the company, and here is the owner, Mr. A. So now both are not same. They are legally separated. How the legally? Because this business is registered as per UAE commercial law. So this company have this certain right as well as obligation, responsibility. Who's defining this? By law. Law is saying this law, the law in MOA, Memorandum of Association, the latest is June 2021. When we read the MOA in which the mention as per this law is company is established. So in which they mention the share capital, X amount, okay, the profit distribution. If 2 partner, 3 partner, the percentage like 20%, 30%, 50% allocate on each partner, and this profit will come after after paying all these other stakeholders like the suppliers payment. After all the suppliers payments or any stakeholders, after settling that. But let's take the scenario if the company is bankrupt. If the company is a bankrupt, default, okay, so what will happen? Like this supplier will approach to whom? This supplier will approach to the owner or to the business only. Like this owner is liable to pay him even he have 1 million. So he will come to the company and he will say, okay, my receivable is there. So the company management or whoever the person or the accountant sitting over there, he will say, okay, this company is under liquidation. So here the liquidator contact with him. When he go to the liquidator will say, okay, after selling all his asset of the company, we get only the 500,000 only. After doing all this activity, we are getting only 500,000. And from that, the 100,000 is our service charge. So balance is a 400,000. So we can pay only 400,000 to you. So now his balance 600,000 is lost. Can he approach to the owner? Can he approach to the owner and say, okay, you have to pay the 600,000 now? He cannot, because owner and the company is a two-person. One is here, one is here. They are not the same. Can he take the owner into the court? He cannot take the owner into the court. He will refer to this MOA. He will say, we have the share capital is 200,000 and we put in the company, and the company is in a loss, and we close the company, and whatever the liquidation as per regulation, you will getting your money. So the 600,000 he cannot recover from the owner. So this is the fundamental concept of this separate legal person. But if the same scenario over here, if he have to recover the 1 million, let's assume if have to recover the 1 million from here. So if his business is paying the 400 only and balance 600, he will come to the owner and he will ask, give me this money. He can take this person also to the court also, and court will say, okay, you have to settle, because both are same, they are not the different person. Guys, whose this point is clear? Any question over here? Okay, now come back to continue. Okay. Unincorporated partnership, not juridical person. Salaries plus wages of the owner, 100% disallowed. It cannot be business expense. Is haram, not non-deductible. Just one of the participant question we discussed. Okay, then so now unincorporated versus the incorporated business. Incorporated means the registered businesses. How it's registered? Let's understand. Connected person. This flow is not inappropriate. Okay, let's come back and see the unincorporated. Continue with the unincorporated businesses. Sole establishment. Sole establishment is not LLC, is the same person. Unincorporated partnerships, the same two-person registered by doing the business by agreement. This also we discussed. So same, the salaries and wages is non-deductible from them. Business is a transparent. Business is a transparent. What does mean? Business is not paying the tax. The owner is paying the tax. Income subject to tax in the hand of the owner. Business is equal to transparent because there is no separate personality. Here we're discussing not juridical person, no legally separate personality. Partners or sole proprietor pay city on their share of income. If the one person, he will pay the city. If two person, they will apportion on that. Owner will pay the tax if running business as a sole trader or partner. So we are counting on the natural person, not on the business. This is mean the business is transparent, that business is a transparent business, not paying the tax, owner is paying the tax. The important, the point is that the owner paying the tax on the business income. Business income. UAE do not have the income tax. They are not taxed on their income, they are taxing on the business. Even the natural person is doing the business, they are subject to tax on their business income. Via trade license, if they are doing the business via trade license or require the trade license. Here the concept is that even you are doing the business without trade license, but it's subject to trade license, yes, it's a business. Incorporated businesses. So in previous slide, we discussed private limited company. LLC, public joint stock companies. LLP, single parent companies, sole proprietorship. But here the important is that we have to understand these are juridically separate or no. So commonly example in the market is the LLC. Other names, maybe we are not heard about that, but single point, just check the license is mentioned on the LLC or no. Business pay the city and transfer pricing also apply. We have to see what are the transactions. Where the transaction is applied because the incorporated business, if the owner is taking, just now the I believe the Swana, she asked whether is there any limit for the taking the salary and not taking the salary. Here is no limit or no discussion, 100% disallowed. But incorporated business, yes, we have to look into that. Even owner is taking the salary is allowed, but the transfer pricing is applicable. So we have to assess the transfer pricing, connected person, market value, how much in the market on the same position is paying. Okay, how much is paying, the same is allowed. If you are exceeding on that, that is non-deductible. So again, this is not the blind, is not the blind. Said transfer pricing regulation are applicable on the owner are on up to 4th degree of the kingship, up to 4th degree of kingship. So this is the connected person definition. Another point as information that we already discussed, the local dividend is exempt as a company already paid tax on their profit, not deducted as a expense. This is the important. In certain scenario is there, and commonly the company distributes the dividend after the tax. But in certain scenario, we have to look into that. If the company is distribute the dividend or paid the dividend before the tax, then we have to calculate into the city. But that is the exceptional case. Yes, please.
In case of the transfer pricing for the salary to the connected persons, if the connected persons are getting salary, then any other allowances or any commissions, for each item we have to have separate transfer pricing agreement.
See, the transfer pricing, if the connected person like Mr. A, if he's getting the salary, house allowance, kids allowance, XY commission, whatever, make the total. And then you have to apply the transfer pricing benchmarking on that.
Rate benchmarking is required for each items.
No, each person, not the item, because person means that position entitled to what is the total salary. Salary means directly cash or benefits. Okay, because he's applying on the position or the person who is getting the, maybe they are getting cash, maybe they are getting benefits. So all will be calculated and then we have to apply. In the corporate tax return, there is a one threshold is given. As per threshold, if the person is getting 40 or 42,000, I think, per month, so annually how much it will be? So the corporate tax return in which they're saying the 500, if I'm not wrong, the 500,000 annually, if the connected person, any connected person is getting above 500, then we have to report. Up to this amount, we don't need to report. So the mean, another way we understand that benchmarking start after this. If you are paying the 600, then you have to do the TP benchmarking. Hope I answered your question.
Yes, sir, clear.
Thank you. Okay, so what is the here we are discussing the exception. Actually, we are saying the local company from UAE company. If we are getting the dividend, it will be exempt as the company already paid tax on their profit. But in certain scenario that is applicable in the exempt person case, as the exempt person case, as the RET trust cases, where because as a trust, as a real estate investment fund, they claim exemption. They did not pay the tax. Okay, but the investor is a juridical person who invests in the fund. Fund claim the exemption. So he is not paying the tax. Now, the dividend he received as a juridical person, there is a certain other terms and condition. If that condition is not met, what he will do, he will add the dividend into his taxable income. And he will pay the 9% of that. This is the exceptional case. This is not the common case. This is a very complex case where the one juridical person make the investment in the real estate investment fund. And again, that fund have certain terms and condition. If is that condition is breaching, that is the 20% one of the condition. If is breaching, then the juridical person have to add into his taxable income. Again, this is just on high level. We will dive into that topic that we will understand how and when and the exception will be applied. In normal case of action, receiving party will not add into the taxable income. Just as the understanding in the UK, the sole proprietor, natural person running business in the UK, they are paying the income tax. Natural person running businesses as a sole trader or as a sole proprietor pay the income tax. But in UAE, if we are running the business, will pay the corporate tax. This is the reason in the UK, the natural person income tax is higher, maybe the 30%, let's say, versus the business in the UK, maybe the 19%. So in UK, they prefer to go with the business setup. And in UAE, even the natural person running the business, he will pay only the corporate tax, not the income tax. So far, any question, please? But in UAE, same point, the UAE pay corporate tax, even the natural person running the business, In UK, income tax is 45 and companies is 19%. Okay, so here the what I'm mentioning earlier, this is the when we start the registration of the corporate tax, these questions are appearing. Why this is important? Because throughout the tax calculation or computation or the associated application of the corporate tax is important to understand. First type, this is we call the business vehicle. These are all business vehicle. How we do this is the from current session for the theme. Natural person is individual. Entity types, he can have the sole establishment, not a single owner LLC. This is the important focus over it. Not a sole establishment or might be sole proprietorship, but not a single owner LLC. Focus over here. Another C, the service agent. Okay, we are familiar with that in some professional activity trade lessons. Local are working as a service agent also. Another is a trader license. This is a small lessons anybody can take if they want to do the as a freelancer also, but you have the UAE resident visa. On certain activity, you can take the trader lessons. The cost is not higher, maybe the 1,200, something like that. So you can take certain activity as a trade lessons and you can do the business also on that. Partner of an unincorporated partnership. So these are the example why this slide is important. This is the starting point of the tax competition or looking towards which regulation we have to see. The second is the legal person, UAE private company, incorporated and establishment, UAE private company, public joint stock company, foundation, trust. As of today, many people are not familiar this part. The normally foundation people are making in the DIFC or ADGMA or REG ICC. These are the three free zone who's dealing with the foundation. But in the mainland also we can form the foundation. Again, that foundation by default is a juridical person, but still we have the right to claim the exemption. This is I'm talking about the family foundation. We can apply for the exemption. Okay, now the limited liability company, single owner company, free zone LLC, sole proprietorship LLC, single owner, private joint stock company, private company, mainland trusts. So here continue in the same fashion, the different kind of business setup, legal person, foreign business, the foreign business with UAE trade license, foreign business without UAE trade license. One of the question was, I think Abdullah was mentioned the branch. Okay, the branch, now the foreign company, branch of foreign company, if they open, they're doing the business via trade license and he have the trade license at the branch. And maybe the business still is doing, but he don't have the trade license. In the case of the poem, place of effective management, still you have to register legal person, foreign business. You have the trade license like the branch license, you will register. Even you don't have the license, but you're still operating poem, place of effective management, you have to register over here. Then UAE nexus of foreign company, juridical person, have the property nexus. One of the example is a property, but we'll discuss in detail. Property, he buy the property and he give on the rent and earning the income. So juridical person having the property and this is his main course of business, he will register in the city. Although he don't have the trade license, he may have the license, he may not have the license, still he have to register. Legal person, clubs, association, society, club, association, society. One of the common example is the taxation society in the UAE. Some of the Indian national tax professionals, they registered as a taxation society. They are doing the quite well on that as a community awareness. Okay, the legal person charity. Partnership, domestic partnership, foreign incorporated partnership, limited liability. This is what we are discussing, the LLP. So let's do one thing. Please open the FTA portal. Open the FTA portal. Let's do one small exercise quickly and make your account on the FTA portal. Not the company one. Let's do in a dummy way. So business type, again, the same thing we summarize in the same fashion. Unincorporated partnership. Again, this is the detailed topic. We will come on that, but let's understand the first.
Recording has been resumed.
So legal person, foreign business. We are foreign business with the UE trade license, foreign business without trade license, like the poem. Normally club, association, charity. Again, these are different kind of activity, but these are commonly companies not involved. Only the few organizations or the limited organization are involved in such activities. Charity organization, again, it will directly it will take into that. I'm going to the partnership. Under the partnership, again, domestic incorporated partnership, foreign incorporated partnership, unincorporated partnership. We discussed today the example. We are doing the business, but without any trade license, any registration. So this is the option for the registration to that also. Foreign incorporated partnership also can become, maybe it's not registered here, but you're registered in the UK, KSA, US, any part of the Europe. Okay, and the domestic incorporated partnership. Here we discuss most of the activities. Here the natural person. Individual or other natural person. Again, two types are shown over here. So let's say we take this example and we will go with this. And now below, start filling the documents and data. So if you all documents are standards, there is no non-standard documents mostly are available. Now the next part. Okay, now here's the one tricky part is, are you qualifying public benefit entity? This is the charity organization. If you are belongs to that and you are registered with the relevant ministry, then it will come the yes. Otherwise, it will be no. Charity organization first. The second, if you have the approval from the relevant ministry. The date of incorporation, we will use the same date of license. Mostly the mainland companies, they don't have the incorporation certificate. Some free zone companies, they have the incorporation certificate. For mainland, we will attach the same trade license copy as the incorporation. You can attach the same trade license copy. Now the next part, the tax period, corporate tax period. So here all the tax period are there. Based on the MOA, you can choose that. First, you have to verify from the memorandum of article. So below date auto populated over there. So we can take Jan to December. So the next, now he will ask the date of incorporation because he will not let us go. So let's say we can take today. This makes sense. So below detail already full automatically pop up. We choose the Jan to December as per MOA. The corporate tax period means the counting period will become the same corporate tax period. Okay, so we don't have any corporation, but we will attach any piece of paper as the attachment. Then he will allow us to move forward. Any piece of paper. Now here the trade license, we will attach the authority, activity, all the standard information. There is no complicated information that we have to. The first starting point was the complicated that we discuss in detail. Here you will add the trade license issuing authority. Here you can choose the issuing authority, whatever the issuing authority, trade license number. And moving forward, the activity, ownership, local branch. If that same trade license have 2-3 branches, you can add under that.